Ladies and gentlemen of the crypto space, we're live on a Tuesday, December 26th at 12:19 p.m. It is the day after Christmas. I hope everyone had an enjoyable time. I myself spent it with family, my lovely wife, my lovely children, and I couldn't have hoped to enjoy the day any more than I did. It was lovely. And now we're back in the saddle, looking at markets, contemplating our future and our position that we try and put ourselves in the future. We're going to take a look at the data. We're going to assess structurally where things are, where they're more or less likely heading. And we're going to talk philosophically. So I like the title of this stream. It's The Reflection. A portfolio is a manifestation of oneself. It's a reflection of who we are and what we want, our expectations, our hopes and our dreams. Now, it is also very much an expression of anxiety, and people use a variety of words. The study of semantics is fascinating. I think about it a lot, which is why I have such pause when I talk. I try and think carefully about literally the sub-meanings of what I say. So sometimes it comes out slow, but it's attempted to be calculated, the ideas that I try and express. So anxiety, clearly what people do in these markets is a reflection of anxiety, of doubt, fear, a lack of conviction. When really a lack of conviction is not a conviction in an asset, it's a conviction in oneself and your capacity to observe reality and believe in your due diligence, your investigations, your research, the time that you've spent. So that's important to really break down why and how we do what we do. And maybe the best thing that comes out of what we do in markets isn't even the financial results. It's better understanding of ourselves. Because really what happens financially is a manifestation of ourselves. Let's pop it over to the main screen. We'll talk some data. I got Mickey on. Mickey's a good thing, especially when you have kids. Lovely history. This is the DXY. And you guys know I've been looking at the DXY for a couple of years at this point, folding it into the way I talk about things. And I find it refreshing because I believe it peers through everything. This chart depicts geopolitical complexities, certainly depicts geopolitical collusion, in my opinion. The result, the direction, the action of this chart tells us what markets are going to do in many regards, especially considering how markets are affected by the availability of capital. And what better chart to tell us the availability of capital because of what we talk about with regard to energy. If energy is priced in dollars and the dollar is cheaper, other countries and the currencies of other countries can buy more energy. Therefore, they have more money. As the dollar goes down, other money is more powerful. It has more purchasing power, dollar denominated. So this chart down, asset prices appreciate. And then there's other things to inspect with regard to the availability of capital to invest and hopefully malinvest less as interest rates are up and people are required to express better due diligence in how they deploy capital. And it starts at the margins because obviously you have the degenerate cohort of society that does whatever they want to do with free capital, but when it costs money to borrow, it changes the behavior of a global society. Because now there's a risk. If you're borrowing at 0%, okay, that is a significantly different calculation as compared to 2.5 to 5%. So the direction of this chart hopefully continues. Plenty of geopolitical reasons for an interruption to the upside, especially if energy gets interrupted. Whatever the hell is going on in the Red Sea is of significant geopolitical concern. But if they're able to control the risk and the fear in the system, they're able to achieve social stability. Social stability means directional continuation. In that regard, there's always uncertainty, but that should not impact really the overall thing you do in markets, which is why we've been talking about for the last 2 years, there's been little to do in markets. Even to this day, that is my base method for engaging with these markets. I haven't done much of anything. I spent I put $1,000 over on Pegasus, on Rolex. It's not going to do anything for the portfolio net long term. It's such a small part of working capital. But I just wanted to click around. So this is a great season to explore the technologies that have matured and iterated significantly over the last 4 years. I mean, it was 4 years ago that Uniswap had like millions of dollars, just a couple of $1,000,000. I remember Uniswap late 2019. I literally had a couple $1,000,000 on it. And what we have today in comparison is awe-inspiring. It's extraordinary. The notion of cross-chain, the notion of trust minimized, facilitators of cross-chain liquidity, that's crazy. Roll-ups. I remember the first launch. I remember the market when we were talking about like Arbitrum and Optimism. And Optimism took a bit more time than Arbitrum. And now the roll-ups aren't even just Ethereum. Rolex is a roll-up for Syscoin and EVM. And Astar is a Polkadot parachain with ZK. It's just downright fascinating. And then all the new stuff, obviously, like Celestia, the parallel EVMs and stuff like that. I didn't need to explore it. Celestia obviously has run multiples, but everything is primed to run multiples. The new hot thing is going to run first, and there'll always be a darling of the cycle, and thus far it's been Solana, but look at Solana down 10%. Nice to see these numbers. I mean, this price action thus far from the bottom, to me, is a validation that it warrants attention. And it's not attention by me, because I've obviously had interest in Solana for a long time. And it was a choice to not have Sol exposure. Hindsight, bad, good, that's not the point. I've had an allocation. I've been deployed to Hero when Solana was $8. Had the Hero position then. Had the Hero position here in 22. So there was always a network of interest. And I'm cursed with the right curve mentality, that there must be logic and reason to behavior, and invest in something that has meaning, something that has significance, and not to follow trends and follow the capital flows and follow the exuberance. And that's what this chart is. This chart is an expression of exuberance. Why? Because Solana is a gas token. You need Solana, Sol, to engage with transactions. So why is Sol running up in price? It has nothing to do with right curve. Why do you buy Sol? You have Sol in your wallet so you could do transactions on the network. What kind of transactions on the network? You know, basically the same shit you do everywhere else. Credit, liability printing, derivatives, transactions. And of that activity, there's only $1.8 billion in the network. And it's a relative world, so relatively speaking, that is a microscopic economy. compared to the other crypto economies that are much larger, multiples larger. So what does that mean? That means that I don't give a shit about the price going up. I like it going up. It's nice because it validates my right curve thesis of exactly what I want to own on the network. Up at the top, Hero, it's no liquidity whatsoever. I don't even know if this is the best representation of active price action, but it's irrelevant. It's about 14 cents, give or take. But fortunately for myself, the price is irrelevant. I have a technological impossibility, or it is technologically impossible for me to liquidate the position. It is worth zero to me. The valuation can help you structure the position size of the portfolio so you know the overall composition. But literally, this fair market value of this asset means nothing. I can never acquire this fair market value of the asset that I own. And to me, that's extraordinary. That's so meaningful from a capital management standpoint, from an investor standpoint, and also from an organizational standpoint. Operating rules, it makes a massive difference. So this happens to be something that a lot of people are critical of. They don't subscribe to this concept of locking. It's not historic. It's not something that exists in meat space finance. But an inaccessible asset doesn't really have definition for treatment by regulating authorities. You cannot get access. You cannot liquidate this asset. And that's fascinating. That's quite fascinating. So what does that mean? The frontier, wild, wild west of financial products and services. It's not like you deposit it with a company and the company says, all right, you can't access this, like an annuity or a CD, which obviously you can gain access to a CD, you could withdraw it early and then you get penalties. And there have been plenty of experimentations with early withdrawal and penalties and taxes and crypto protocols. But there are many protocols that you cannot access the fair market value of the asset, period, for a period of time, often years. So what is the valuation of such assets? It's a very philosophical thing that is untested in meat space. I love that. Anyway, so I digress. Everything looks the same. I mean, literally all the charts look the same. You either have breakouts ripping through relatively long-term moving averages or right into resistance, ready to break out through these long-term moving averages. So Bitcoin, smart contract, Bitcoin applications layer is very hot. For some reason, Stacks has a lot of attention. Stacks and Alex, that's basically the only thing that's going on. There's literally nothing interesting on Alex from an investment standpoint. Certainly none of the BRC20s or any of the inscriptions. That doesn't really garner my attention. I lump the inscription activity into like exuberance, like Solana exuberance. It's just validation that my inspection of these networks as being significant in the construct that I have, and that's big, that's meaningful. It's confluence. So Bitcoin applications layer is a big deal. And price action doesn't validate or doesn't invalidate anything I'm thinking, like, oh, this is going up, so maybe Stacks is the new applications layer for Bitcoin. I mean, you only have 20,000 applications on EVM networks that Rootstock or Rolex can just, you could deploy, like just copy paste. Not just copy paste, but the point is you could literally deploy an application that's been deployed on mainnet or wherever, an EVM network, onto Rolex or Rootstock. It's like boom, and now you just need cross-chain liquidity. And then that's the whole point. How can it be argued that something that is not compatible with 20 bajillion applications is more significant than something that is compatible with 20 bajillion applications? So that's why the Rolex, the Syscoin optimistic roll up on Syscoin's NEVM is very interesting. And just like, look at Matic, stuck below the 100 on the weekly. Look at Syscoin, stuck right above the 50, below the 100. It's not there. Let's go to the monthly, but I like the monthly because you end up getting TWAP interaction. So you had a punch through the TWAP to the upside, and now we're pushing through again with 5 days to close above the time-weighted average price. Let's compare to Matic. Look, it's the exact same thing. It's literally the exact same thing. It's literally a punch through, rejection, and now it's punching through again. You guys see that? It's every chart is the exact same thing. It's the same thing with Atom. Punch through time-weighted average price, about to close 5 days, resistance at the 50. Everything's slightly different. So Polkadot has broken out significantly above the time-weighted average price. It's much further ahead. If anything, it reminds me of Solana. So that's why I've been looking at Polkadot and Solana charts a couple times as I posted on social media. Because look at Solana. Failed breakout above the monthly TWAP, breakout, and then just freaking ran. Okay. Everything looks literally the same. Even stacks, except it's just much less liquidity, smaller cap, and you get the wild deviations from the average, the divergence. And what do we say? If you diverge to the upside, it's at a premium. You diverge to the downside, it's at a discount. So I don't hold too much value in this chart. It's just too new and too low liquidity to really get that confident inspection. Same thing with Iris. Look at all this activity trying to break out on the downward slope of the time-weighted average price. That's wild to see. And the breakout, and we'll see. We'll see if it closes above. And most recently, throw on Astar. What does that even mean? Astar has a ZK roll-up on an EVM on Polkadot. Early, it reminds me of the same thing of like stacks. There's literally nothing to do. I mean, it's kind of like Solana. There's not much to do on Solana. I mean, I don't hold the trading of NFTs or inscriptions as significant. There's plenty of PvP action where you could literally PvP is extracting the money out of other people's wallets by capital gains, and that's okay. That's natural. It's very Darwin. You get in first, and 10,000 people buy after you. You take some profits. But that's not investing. That's active behavior. I prefer passive behavior, and passive and active are key considerations in organizational structure of meat space. Passive means you're on the beach and you click claim. Active means you're sitting in front of a damn terminal trying to respond to vested interest in peer activity. Looking at technicals and trying to understand their decision-making process. Passive is more of an internal investment strategy where you're playing against yourself, finding confluence in validating ideas, strategizing. Frac, same exact pattern. It's the same everything has the same pattern. I can't take it. I mean, look at that. I mean, does this not look identical to this? I mean, yeah, you put it on the same chart, you're going to get different, price levels. But look at the chart. Look at this chart. Trying to break through the time-weighted average price sloping down, discount, and the swoop up through the average price. And then you look at Frax. Trying to break through the time-weighted average price sloping down, the swoop down, discount, and the flip to the upside. I mean, it's even the same thing on convex and curve. This on the 10 SMA, for what it's worth, it's a relatively new asset. the swoop down, and failed breakout. That has to do with supply, emissions, liquidity, and all the things that we all know all too well. And look at this market coming down very nice at this point. 15% on Solana, 3-4, probably heading towards 5-6% on Ethereum and Bitcoin. Looks so. Just as quick as the market goes up, you start to get those red ticks going down. Look at Avalanche, 13%, 15%. Woo! Osmosis up 7% on the day, while Solana's down 50. The whole road. You remember back in 2021 and some of 22, we had the rotator meme. Not for me. Never, ever again. Rotating. It's too much work. That's too much work. Never doing it again. Anywho, hi guys. Juan, ready for your rational doses? Professor J is in the house. Raul, Old Gaffer. Hey Dan. Drew, Finance Goblin. What do you think about FXN and possible beta equals zero stablecoins and lots of different underlying? So F of N, it's a heck of a protocol. It's going to take time. Right now, there's little to no interest in what's going on Ethereum mainnet, which is interesting because all the liquidity is on Ethereum mainnet. It just shows you the state of the market. So here's your inspection. You see all this insane activity, 15x on Solana. Where's the investments? So what you're talking about is an investment into a protocol that has meaning, it's significance, it's credit, it's liability printing, provides liquidity, it provides actual financial functionality that could service meat space at some point. It's too right curve for this market. This is left curve heaven right about now, these markets. So know the market. And what your statement like that is the process of contemplating owning a position. Okay, does it warrant a position? I would say F of N warrants a position. FXN is a heck of an asset that's up significantly. I opt not for a position. I don't need exposure to it. I opted for exposure vis-a-vis concentrator. Nominal position, so watch your position sizes. This is obviously very low liquidity. Even FXN is relatively low liquidity, but this looks prime for a full retrace. I was straight up double top. It's all just hanging. You get one big seller that punches it through the 0.5, and it'll just keep cascading lower because at some point the narrative shifts to, oh, am I going to be able to take any money out? How low is it going to go? It's literally, you have to zoom out to like 2 to 4 year cycles on Bitcoin to inspect those kinds of sentiment changes. With a lower liquidity asset, you see those kinds of sentiment changes intracyclically. So you have the larger components of the cycle, the larger liquidity cycle, the larger Bitcoin Ethereum cycle. But these types of assets with relatively low liquidity cycle more times, intracyclically, as I would call it. 10, 20, 30% retraces on Bitcoin and Ethereum are historic norms. So why would 10, 20, 30, 40, 50, 60% retraces on low liquidity assets not be a norm and not to be expected? Certainly to be expected. So which is why this is what I look for. I look for assets like this. This is Pegasus on Rolex. I mean, literally a nominal position size. I popped, it's like 0.01% of the portfolio. And goes 1,000x on the money. I mean, there is not even zero liquidity on the network. There is no network. There's the functional aspect of the network, meaning it works. And frankly, the transactions are quite impressive. It's like instantaneous. It's faster than optimism. I've actually never seen much like it, especially considering that it's secured by Bitcoin, which is a hell of a narrative that could easily catch fire quick. And that volume, someone took a relatively large position. So this is the type of stuff that catches my fancy. Not on the way down, stuff that hasn't moved yet. You want to find things that have yet to garner attention, not jump on a moving train for shit that already has attention. You want to inspect things that fit into a narrative that has yet to hit mainstream's attention. Even Aave looks the same. They all look the goddamn same. The punch through the moving average, and then bam, the MACD, and everything is off to the races. Not much of a MACD on a monthly chart because all this stuff is new. I mean, 2 years, what are you going to get on a monthly chart? Or it hurts. Or, oh, it's so painful. It's so painful. But it still pays. Pays very nicely. It surely isn't compensating for the depreciation of the principal, which is why the most imperative observation for an incentive regime is a sterilization component. I mean, Jones Dow is not enough. That's why curve has expressed the strength it has, and not down, 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 and fresh lower low. Literally just had a fresh lower low the day before Christmas. It's because deterministic recycling is a big deal. That's a big narrative. It's also a complicated narrative to try and explain to folks. Zoom out to the monthly on curve, you're still not at the time weighted average price. So this has a similar characteristic to convex. Rejected, 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 following the time weighted average price down, but finally, an interaction with the time weighted average price. Finally, an interaction with the time weighted average price. Give it a quarter. Check back in March, Q2, April, May, June. And you'll finally punch through the time weighted average price to the upside because cycles will cycle. This shit is built into nature. So this is the stuff that's still at a discount. Could also obviously inspect that this is the stuff that's not going to outperform to the upside. You're not going to get your 15x or whatever the hell Solana ends up doing, 100x. Not going to get those kinds of numbers, albeit Solana is highly, if Solana rips these kinds of multiples, the amount of emissions on Solana is extraordinary. Subsidizing network security by dilution, inflating the supply. So we can see insane exuberance, albeit there's not much emissions, relatively speaking, for the likes of Curve and Convex, considering the extent of sterilization. So that could be very interesting. Fortunately, they're positions, yet not positions. They're locked, they're not liquidatable, and they're guaranteed to be here into the future. So that's very comforting. I look forward to seeing what plays out with what is mine and many people's core positions. I'd love to see this thing go. This thing is, folks don't understand, Syscoin is the remnant, is pretty much the only remnant from 16 and 17. Everything died in 18 and 19 because it was useless. It was ERC20s. It was shitcoin. It was shitcoin on steroids. It was nothing. So what came out of 16 and 17? Syscoin happens to be one of them. Aave did. Aave came out of pre-19. That was Lend back then. Bancor, unfortunately, they were one of the originals, but they have lost a lot of traction. Celsius kind of killed them in many regards, unfortunately. But Syscoin is one of the remaining. And what is interesting is Syscoin is one of the remaining protocols from 16 and 17 era that has master nodes. So that presents a very unique type of thing, especially considering the current landscape of systems and thinking about what survived from our most recent era. 16 and 17? Oh my. I mean, come on. Who wouldn't want a Dash master node that actually works and secures the network and does what it was supposed to do, does what a master node is designed to do? That would be very interesting if this becomes entrenched and reinforced and part of the ecosystem. Tapsies in the house, pleasure. Uh, Finance Goblin, my man. Ancient. What do you think about the combination of V tokenomics with deflation token PancakeSwap is implementing? I ignore Binance Smart Chain, albeit they're probably diversifying at this point. It's an exchange. An exchange is an exchange is an exchange. So that's all you have in crypto is credit, FX, which is exchanges, foreign exchange, and these are foreign currencies, and derivative products like LSDs and so on and so forth. That's the whole thing done over and over and over and over again. Oh my God, to the point where everything is the same. So just food for thought in that regard. So there's no difference between PancakeSwap and any of the other exchanges. You'll have your variations in tokenomics, and the market will define by natural selection what is stronger and what survives. So for me, I go to the base layer of what is pretty much established to survive at this point. Back on Ethereum mainnet, which is not just Ethereum mainnet. It's on, there's a 9 change curve is on. That's cool. So I don't need to follow the hype at all. It's all good. Hope that helps. The thing with FXN is that it could scale massively. Yeah, so could everything. Everything's going to scale massively. You don't think FRX ETH is going to scale massively? Even as Alito, Rocket Pool. Oh my God, all of it's going to scale massively. The number one thing you need to invalidate when you're inspecting something, the potential is to scale massively. It's all going to scale massively. The whole start of the stream is looking at these charts, and they're identical. Peer through the bullshit. You got it. So that means the more important question is how to differentiate between all this shit that's going to scale massively. And that's why we have these narratives we've discussed over the last years is how do you simplify a portfolio? How do you concentrate a portfolio? Are you going to do capital gains? And you're like, you're doing all this work. It takes forever. You have to sit in front of the computer forever. Or you want a passive portfolio that just pays you on the weekly and you're a dividend investor of sorts. So that's why I spent all this time thinking about those things, because it's all going to scale massively. And I want to do the least amount of work possible. Hope that helps. Various stables being included. Yeah, everyone's making a stable coin. Everyone. And they're meaningful. This is all about endogenous liability printing. That is the biggest narrative in crypto, because that's the way the world works. Collateral, currency. And the world operates not on physical currency. The world operates on digital currency that are liabilities of physical currency. And in many regards, the base currency of the planet right now is not even currency units. The base currency, the money of the planet, is U.S. treasuries. Go figure. Process that shit. Hope that helps. Yep, Finance Goblin. Keep the wheels spinning. Don't drive yourself nuts, though. Did you lock your CTR? If not, why hold since you're not getting any yield? These are good questions because, my man, you make a good question. Pros a good question. I have not locked my CTR. I have sentiment going into 24, obligations that require capital potentially. So a capacity to access the fair market value is necessary. I have not locked it, so I haven't found the conviction I need yet. And that's a great conversation piece. That type of self conversation you have to have with yourself. What does it take to buy something and lock it, and you'll never be able to access the fair market value of the principal? Or these are great questions. I don't have answers. These are open-ended questions, and this is really what I would love to hope to teach people are the most important questions. It's not which fucking coin is hot today and then not tomorrow, because as you can see, everything goes deep red. I mean, look at Sol and AVAX down 13 and 10% respectively. That is some serious volatility. That's what happens when you're at a premium and people keep buying at a premium, and then they buy more at a premium and they're still buying at a premium. At some point, the person up 100x on the money is going to take their gains. Complicated, self-reflective conversation, you say, Dan. Hild, Merry Christmas. Thank you very much to each and every one as well. I am basically all in convex and FXS. I think that's a locking of assets in VCRV will at some point lead to deflationary pressures as the volume of curve finance increases. Well, it's not going to be as net deflationary in the same way as Ethereum, but it can be deflationary depending on how much recycling is done, and that depends on third parties. So it's a very interesting dynamic, and I've been always thinking about the tokenomics and how to put it in terms of a framework consistent with really what the United States did with Saudi Arabia when they conceived of oil for gold. And in many regards, what do you think the U.S. does with foreign nations? It's like, all right, we figure out a way for you to buy debt and don't sell that debt for 5-10 years. Okay, what does that sound like? If you did a deal with Saudi Arabia, yeah, we're going to buy all this damn oil, but you're going to recycle your excess money. You're going to store your excess money in our government debt, and you can't sell it for 5 years. That's exactly what voting escrow is. It's identical conceptually. So I have a feeling Mexico's next on the list from a geopolitical standpoint. Like, that's got to be our biggest trading partner heading into the next decades. They're right here, and they have the prime demographic composition for working labor. So yeah, we'll send trillions down to Mexico, but how are you going to store it? How are you going to save the money? So you got to buy our bonds also, and you can't sell them for 10 years. Sounds like a voting escrow contract to me. Pretty interesting. The volume on curve will get insane in the future. Yeah, I also see that long-term future where you could literally have international trade settled on or vis-a-vis something like a curve finance where you're able to change one denomination to another. So you pay in one denomination, you settle in another denomination. And that's what these types of markets facilitate, except in these markets you don't need escrow. In these markets you don't need intermediaries. The intermediaries are disintermediated. These intermediaries are immutable, and it's just pure software, so there's no humans involved in that transaction. I have capital, I want a product, and I can pay you in whatever denomination you want. That's the meaning of these markets. Now you could do all this in meat space, but in meat space you potentially have many counterparties, which has different degrees of risk involved. And in meat space you have settlement time, where it's T plus 2 days for equities market settlements. Or in an ACH, it's 5 days for settlement. Or a Fed wire, it's maybe a couple hours for settlement. Or a Bitcoin transaction, which is 15 minutes or whatever the hell it takes for a couple of confirmations, maybe an hour. Or Ethereum mainnet, where you could pay enough premium on gas and you could get a settlement in 20 seconds, 30 seconds. Or you could use a roll-up depending on risk assessment, risk department, and he could get a settlement in seconds, or he could use one roll-up versus another and get a settlement in a fraction of a second. So that's what you're talking about. You're talking about credit, FX, and derivatives, which is currencies and the facilitation of settlement. So you have to put the long-term perspective in terms of meat space and the real world. And that's the destination. That's the adoption phase. And that's not a narrative for what's going on in Solana right now. Adoption. Oh, they're buying the Solana. Buy my bags is not adoption. There's very little adoption. You know what adoption is? When you hear Swift and XRP, or when you hear BIS and what the stuff we hear about from Link, and then pick a protocol that some central bank around the world's doing experimentation with regard to CBDCs. That's adoption. As much as we have a sentiment towards nation states consist of people, and people using systems, that's adoption. So there is not much adoption. Use, capital flowing into these markets and speculating on price, that is not adoption at all. So there's very little to no adoption at all. You know what adoption is literally the Michael Saylor narrative of using Bitcoin as a treasury instrument. That's adoption. There's been no adoption. It's literally just MicroStrategy and a couple, probably, a dozen? Just a rough number. A couple of companies. But that is at least a way to inspect in the future how much adoption we have. So those are very interesting things. Bitcoin as a treasury asset, as Saylor talks about, is one of the few existing meat space narratives that can measure adoption. And I know where my interest is. My interest isn't necessarily on corporate treasury composition. My interest isn't necessarily on meat space, the crypto market, tokenization and representation. My interest isn't necessarily on CBDC functionality. My interest really is free market, liquidity and settlement, FX. I just want to own a piece of FX because you can't do that in meat space. I've said many a times, you go to a bank and you say, here's $1 million USD and €1 million, make me a market. I just want 0.2% of transaction fees. You're not going to get it. But you can't do that in the crypto markets because these markets have disintermediated that counterparty and have made it software. Immutable, deterministic software. And to me, that changes everything. So we're very happy to see where this heads in the next 10, 15, 20 years with regard to that adoption process. Hope that helps. Massive adoption can be fintech banks interacting with open blockchains, with CCIP, Chainlink, interoperability, technology. Yeah, that's cool. That's a very high time frame, large degree of adoption. Look at all the regulatory hurdles, the OCC, what banks can do, the whole SEC, CFTC narrative, whether it's a security or a commodity. I don't give a shit. I don't have patience for all the bureaucracy of Gen Pop and meat space. I don't want to deal with people and humans, so how do I best express, reflect, how do I best reflect my sentiment, what I want things to be in the future? And I want a public network. I talked about it with Digibyte a long time ago, a lifetime ago. Public utility, established, protected by the public for the public. That's for the likes of Bitcoin and all of these networks. And that's separate and apart from the argument of which is better. It's not about which is better. The market will tell you which is better. The market will tell you what survives. And I align with the concept of settlement, foreign exchange, liability printing, and the liability printing because I understand how the way the global financial system works and how the U.S. Treasury market is basically the liquidity in the system because it's a facilitator of the liquidity depending on other conditions like bond market volatility and interest rates. And all of that gives rise to our liquidity cycles of late post 2008. So the world, as Raul talks about, has become very orderly, at least when operating under what has become normal conditions. This is very understandable. The world is cyclical, it's methodical, they have a goal and they structure the system to achieve that goal, which is the continuity of these markets. So you ask yourself what conditions or what parameters need modification to maintain continuity so the system doesn't fall apart. And because of those parameters, we see basically where we are in the cycle. And basically all those parameters say 2024 is going to be very interesting. And that's why path and destination. Yeah, we can have some crazy geopolitical shit go down. Or it doesn't. That's the path. But the destination is defined by the consensus need for continuity in the system. No nation state wants their population falling into chaos. So they tweak the parameters in order for the continuity to occur. So the destination is clear. The path always will have uncertainty. Hope that helps. Any charts we didn't cover? Ethereum's still lagging, but it looks like this 50 SMA is probably the premium discount fine line. I don't really pay much attention to argument that it falls from here. It doesn't make much sense considering the activity and liquidity on the network. The liquidity, to me, the liquidity depth on the network validates this is a place of comfort. And what do I mean by liquidity depth? There's $1.26 billion. Listen, this is not total market cap of crypto. I don't give a shit about TVL. Here's an interesting one. Whatever the damn TVL you think is on Ethereum mainnet, you can literally look at CoinMarketCap and then CoinGecko. What am I talking about? What are we back in 17? You look at the market caps of shit on Ethereum mainnet, and I don't care what the market caps are because if you sell every single asset on Ethereum mainnet, the maximum amount of dollars that you're going to have is $67.59 billion. That's what dollars means. It is the ultimate measure of the potential for financial activity. Because if 100% of assets are sold, that is everything that remains. $67 billion. Next up is Tron. But Ethereum mainnet has the vast majority of capital on the entire space. Folks are going crazy over Solana with $1.8 billion. It's basically microscopic. And sure, you could take the argument that, yeah, that's the potential for it to expand to $60 billion. Okay, great. Structure the portfolio based on now, and you speculate based on the future. That is a potential, considering the price action of late. And then you have the conversation like, oh, is Solana this cycle's Ethereum? And that's probably where I'm at in my mindset, is trying to see how things are staggered. Solana heads into where Ethereum was in 2020, and then other shit are going to fill Solana's shoes. But this is a very different market, meaning you didn't have the likes of what's going on Polkadot parachains, on Cosmos hubs back in 2020. There was nothing. There was nothing in 2020. Nothing. There's a couple of $1 million on Uniswap, and it was nothing. That's what's so freaking fascinating. It's so different this time in this regard, and all the roll-ups and all the networks that everyone's so hot about, Celestia, all that hype and shit. But it's a network that has no liquidity. It's just, all you could do is sell the gas token. The whole significance is my right curve take. It's just a gas token. That's all it is. So it just boggles my mind, but it's a reality. These assets deviate from the mean to the upside, and everyone's buying at a premium, and a premium like it's going to keep going up. But what's the use of it? The use of it is a freaking gas token to do transactions. Therefore, to measure the potential for the network, it's the liquidity. It's not the price or market cap of its gas token, which does bring up some interesting thoughts with regard to Bitcoin. The price, if that turns into a gas token, but that'd be pretty interesting, which I think it does in many regards. But it maybe not, because it is the first mover of first movers. So maybe it's this fascinating global pristine collateral. So that's meaningful. That has these types of narratives must be considered. So you could justify significant deviation from the mean. And a monthly mean on Bitcoin doesn't mean shit. And it clearly hasn't even run yet compared to all the other exuberant price activity we've seen. Hope that helps. Killis, Merry Christmas. Welcome aboard. Athletic Concept. What's up, Cap? Will CVX get the attention it deserves in the coming years? I have a long time horizon, but will the volume of users increase? Thoughts? There is $67 billion on Ethereum mainnet waiting to engage in financial activity. It is a marginally positive sum environment. It's been skewing towards positive sum versus negative sum over the last couple of weeks. My friend, of course it's going to get attention. Why would $67 billion be on mainnet? Why? You have to think about all of this activity in terms of emerging markets, nation states. Capital flowed to this country. It stayed in this country because it feels comfortable in this country and is exploring financial opportunities in this country. Capital flows from country to country depending on cyclicality, pressures, and opportunity. Capital flows from underperformance to outperformance. Whence hype, if you want to call it that, or greater opportunity of price appreciation presents itself. The capital flows to mainnet are going to be extraordinary, from external sources, exogenous flows, as well as endogenous money creation processes. And mainnet will have very interesting activity at that time because it is a larger network. It is a more expensive network. This is not the network of $5, $10, $15. This is the network of $40 transaction fees on a slow day. So this is a network where you have transactions that are $10,000, $50,000 at the larger, at the smaller size of the transactions. And that's exactly the network I want to operate on. When you go into the penny slots, or you go into the dollar slots. And that, to me, is the table that I would prefer from a casino analogy perspective. It doesn't mean you can't have fun on Solana and that you can't have great business opportunity over there, which is why I have that kind of exposure to those types of businesses. But you obviously see the list that I'm following. Ethereum, Bitcoin, Solana, Polkadot, Atom, Osmo is up massive. I mean, look at this. This was an airdrop that just got locked. And it's been producing 15% for the last however long, 2 years since it was released. And I don't know, this thing was worth like $2,000 at one point, and now it's worth like 18. And I'm like, oh, that's cool. Wild to just let shit sit. Syscoin, Bitcoin applications layer narrative. Aave is Aave. Aave is the original money market, pre-compound. 2018 heading into 19, Aave Lend, they've been around. This has like crypto banking written all over it. Or Federation, financiers. Not as much strength as other federations, but a position. And it would, for the time being, it should remain a position for myself. We will reassess in Q1, Q2. 2024 Stargate is something I've talked about, and it's finally pushed above 10 SMA time weighted average price on the monthly, 64 cents. It was as low as 52 cents since a couple of times we've talked about it. It's at 64 cents. I mean, this has somewhat of the link type of narrative, but it's not because there's more an endogenous type of liquidity, cross-chain liquidities, or seamless cross-chain liquidity. CCIP is really about meat space to crypto. It has it written all over it. But what they've done with the zero tokens and layer zero, facilitating these omni-chain fungible tokens, this is much more robust from a crypto space standpoint, and thus why we've been talking about it for years. Curve convex, the deal. Frax, what are they not doing? Polygon's in the India narrative, very interesting to see. Between Polygon and Avalanche, those are old school favorites from 21, 22 that's very meaningful to keep an eye on. Avalanche has always had a bit more exuberance than Polygon, and we could see that with the 10% retrace on the daily. I wouldn't be surprised if a lot of this red closes green today. Keep an eye on this Stacks and Alex. Very interesting, because a lot of what's going on Bitcoin, to me, is folks that have had all this equity, all this collateral, and have had nothing to do with it. So they're just lashing out and trying to figure out, what the hell could I do with this shit? And that, the whole narrative of demonetizing the world, that's great and grand, but those are 4-year cycles. A lot of time between now and 4 years. So they figure out what you could do with your equity, untapped, dormant equity. Phantom got hit hard, but it's got a lot of technological offerings from a chain perspective. Has great cross-chain integrations. Nothing much has been the same since multi-chain just evaporated into nothingness. But look what it's doing from a technical perspective. All the charts look the same from a monthly time-weighted average price perspective. It is what it is. Astar, I keep my eye on it from a Polkadot parachain EVM network standpoint. That was Plasma. There was a Plasma lock drop how many years ago? I think that was 2020 at this point. And they used it to finance the Astar. And we'll see what comes of it. There's nothing to do on a lot of these networks, just like there's not much to do at all on Solana, because it's relatively player versus player, just people trying to pump a price and achieve capital gains. And to me, that's not the most significant expression of a market's activity at all. I would love to see Solana. I would love to see another chain get to 10, 15, 20 billion dollars worth of available liquidity. That would be very interesting. Because right now it's literally just mainnet. And then everyone's like, oh, mainnet's done. Yeah, okay. Show me quantitatively how that is even a reasonable inspection. I mean, Tron's the only thing that comes close to mainnet. Binance Smart Chain is large, but geez, $4.5 billion. That's nothing. Once Polygon, everything's under $2 billion. Avalanche, Optimism, 600 mil. Phantom, 370 mil. Base, 319 mil. Omni, Kava, another Cosmos hub. CK Sync, 98 mil. There's nothing. The market is mainnet, quantitatively. I think we'll end on that note, because it's just peering through the bullshit of the prevailing narrative that, oh, something else is going to be more popular than Ethereum. Popular is not the biggest takeaway. You have to inspect something quantitatively. And the amount of liquidity on mainnet is a whole nother level compared to anything else. It's an order of magnitude larger than everything other than Tron. Sir Joe, President accounted for. Thank you, everyone, for joining me today. 28 people made it to the end of the stream. 8 likes. Press that thumbs up button, please. I appreciate each and every one of you. Tell everyone to subscribe. We do better together. In the description is a link to the most rational community in the entire crypto space. Thank you all for joining me. I will be back later this week. I wish you all a good one.